Welcome back to the Zero Hour with RJ Eskow. I am not RJ, I am Alex Lawson sitting in for Eskow, and I am very happy to be joined by journalist and award-winning author David Dayen. You have to check out his book, Chain of Title. I know that a lot of the listeners of this show have already bought that book. If you haven't, you should now. But we're going to talk about a series of reporting that David did over at The Intercept on naked short selling. But David, I want to actually start off by saying that your reporting on this, your reporting is fantastic, but the format was annoying to me because I did not like to wait for the next part. But I did check.
That's what they call a serial, and when NPR did it, no one seemed to mind.
I know. I was really like, wow, am I that impatient now? But fantastic reporting.
I think we have this culture. It's interesting because one of the, to the extent that there were complaints with the series, they were what you just said. Like, I can't stand these cliffhangers. Thanks for wasting my time. And a couple grumbles like that. But this is, we felt like this was a good format because you're really looking at an unfolding series of events, and we were trying to do it the way that this individual named Chris D'Iorio was figuring this out. And so we wanted to do it step by step. And because there were twists and turns in it, we thought that this was the best way to present it.
I really, I was only joking that I didn't like the format. It was a great way of writing it up. There was so much kind of dramatic tension in this story that it actually did give you these cliffhangers. But luckily for all of our readers, they can just binge read it now.
Yes.
Right?
Yes, it's the Netflix option.
That's what we did.
Read.
But let's dive into what it is. So it's actually a very complicated subject, and I don't want to lose all of our listeners, going too far into it. But we need to go a bit into it to get at like the fact that it's complicated is how these large Wall Street players are getting away with what looks like pretty fraudulent activity. It's because it's literally difficult to figure out what they're doing. How did you discover this story in the first place?
Right. So Chris D'Iorio, who was a trader on Wall Street, he was an institutional equity trader and financial analyst, and he contacted me last year, actually, with just a mountain of information. You're saying it was good to you can binge read this story. I binge read this story when he dumped upon me just tons of information all at once last year. And as I started going through it, and I get a lot of sort of over the transom emails from people with tips and ferreting out various types of fraud. And some of them are valid, some of them aren't. With this story, I was unable to really refute most of Chris D'Iorio's claims, even though they seemed so crazy, and they involved penny stocks and money laundering and naked short selling and tax evasion and the involvement of Swiss banks and hedge funds and shell corporations and private placements and private accounts. It was all this stuff whirled into this conspiracy. And it does seem like a conspiracy, but that doesn't make it untrue. And everyone, not being someone extremely well-versed in the penny stock world, and a penny stock is a stock that sells for a very low amount of money. Actually, anything under $5 is considered a penny stock.
So
the majority of them trade under a penny. They trade for almost nothing.
Let's spend a second there because that's important to the setup. So penny stocks is the world that this is taking place in. Not only are these penny stocks, as their name would imply, cheap, but back before the Great Depression, there were bucket shops, right? So these are kind of analogous to that, and in both cases, what it is it's also very important that it's a primarily unregulated or underregulated. It's got a lot of nooks and crannies that no one ever looks into, and that's important.
Yeah, it's a very caveat emptor market, let the buyer beware kind of market, because many of these companies don't have to provide public reporting on their activities. It's hard for investors to get unbiased information. With the rise of the internet, the bucket shops have gone online, and there's a lot of touting of these stocks through press releases, through message boards, people promoting the stocks and then selling out of them, what is known as a pump and dump. You raise the stock price to a certain level by enticing people into the stock, and then you sell all your holdings, and the stock craters, and investors are left holding the bag. And this is very common to the penny stock market. And Chris, he bought a penny stock, and this kind of thing happened to him. And initially, he thought it was just a pump and dump, and he was a victim, and he took his lumps. But when he started investigating, he realized it was something much bigger than that. And it took him to see, who was actually trading the stock for him to unravel this larger scheme.
And so there's this guy, he buys this stock, and he's a pretty savvy investor, so he realizes that there is a high level of risk to his investment. He actually, on paper, makes a bunch of money. I'm just going to talk about it really without getting super into the details because...
No problem.
But he buys this. It goes up. Now, but this is where the first flag goes off, right? Because now he's made a bunch of money on paper, but because of that, there is a sort of a hold put on selling this stock, right? So supposedly...
What actually happens is that there's a merger that takes place. So this company that he bought, which he thought was a chip maker, all of a sudden merges with a travel company, which is unusual in and of itself. And he's wondering why, and through that merger, the stock shares become restricted, and that's what you're talking about. He's unable to sell them for a year. And everybody who's a major shareholder in the stock is unable to sell them for a year.
So, I know our listeners know this.
Sell their shares.
I also have to.
However,
I have to do this.
The shares go down. Yeah.
I have to do this real quickly. You're listening to the 0 Hour with RJ Eskow. I am Alex Lawson, sitting in for Eskow, and we're speaking with David Dayen, award-winning author of Chain of Title and an investigative journalist, about his reporting on penny stocks and naked short selling that you can find in The Intercept.
I should say there's an easy way to find it, and that's if you go to The Intercept and look for the Penny Stock Chronicles, and all 7 parts of this series are there.
And then you can binge read them. So where we are is this investment. There's been it kind of doesn't make sense why it merged with a travel company, but now on paper this investor's made a bunch of money, but there's a restriction placed on all major investors. This is common, where they cannot sell their stocks. Now, I know the most basic concept is when people are buying something, the price is going up. When people are selling something, the price is going down. So now what happens next is supposedly major investors in this are able to sell, and yet the price starts plummeting.
Yes, it goes down 98%. It goes from $3.50 a share to 6 cents a share, and now it's 0 cents a share. He's lost every dollar he ever invested in it, and I think it was about $100,000, the initial investment. So he's wondering why, and he takes a look at who's trading the stock. And at that time, the 2 biggest entities that were trading the stock were UBS, the Swiss bank, and a company called Knight Capital that is known as a broker-dealer or a market maker. Sometimes they're called those phrases interchangeably. And what it means is that they create a market for a stock. If you're looking to purchase shares of this travel company, let's say. Knight has these shares in inventory, and they'll say, okay, we'll give them to you, and then we'll create the market for you, essentially. And they make their money on the difference between the spread between, the investor coming to them saying, I want this stock for 10 cents, and they say, we'll give it to you for 11, and they purchased it maybe for 9, and they make their money on those 2 pennies for every share that they sell. And this is a huge business. Knight Capital represents about 11% of all shares traded on the New York Stock Exchange. But interestingly, the vast majority of their share volume comes from this penny stock market. Comes from over-the-counter stocks.
So that
have this quality of being less regulated.
And that's the first thing where it's kind of like, wait a minute, why is this major Wall Street player who, as a market maker, have somewhat different rules in order to allow more liquidity in a market, but they're as a major player, they're actually kind of allowed to do things a little bit more flexible to make sure that a market maintains liquidity, and yet they're playing in this unregulated side of the market, right? They're playing in huge volumes.
And it goes even further than that, because a number, what the Iorio found is a number of the shares of stock that they were trading were in stocks that were chilled. And what that means is that something suspicious came on the stock, and the private company that kind of deals with the handling of stock certificates said, we're not doing that anymore because we have questions about this stock. And those were the stocks that Knight decided to start trading, which means they had to handle these paper certificates themselves and exchange them with the investors who they were working with. That is a huge red flag. And when I brought that up to people who are experts in this business, they were very surprised that Knight Capital made a business in these chilled stocks. And because other players don't get involved with these chilled stocks, it enables them to gather more control over the share price and push that share price down.
Right. So that's going to be that's what we get to right now. Your investigation and your source's investigation, they find that it's not just and this is a hard story to get to the punchline in the 5 minutes we have left.
Right.
But what we find is that Knight is actually making a business specifically in these chilled stocks that are in this very unregulated corner of the market, the penny stock side, and then a subset of this unregulated or less regulated side that have been chilled, which means they have red flags all over them, which is driving basically any other investors away from it. And yet, for some reason, this major player or two major, they're moving into it. And that is where, so now knowing that we only have 5 minutes to kind of get to this, why do they do this? Like, how do you actually make money on these basically broken stocks? Right.
So what the Iorio alleges is that Knight is engaged in naked short selling. And we know what short selling is. That's sort of a bet that a stock will go down. And the mechanism by which you do that is that you borrow shares of a stock at a certain price, and then you sell them back at a lower price, and so you make money on that exchange. What they were doing was called naked short selling, where you don't borrow the stock at all. You just start selling extra shares of stock and promise to get the securities later. The difference is that Knight never got the security. They continued to do this naked short selling, which pummeled the price of the stock. They would make money out of the trading profits of short selling, but they would not ever satisfy the obligation to close out these transactions. And this gets somewhat technical, and I try to walk you through it in the story as best I can. And it goes on to involve, UBS, which was the other side of this equation. How are they making money if both sides of the stock, if somebody's going short, somebody's going long?
Right.
How is UBS involved? And his theory is that UBS is engaging in money laundering for high net worth clients, and they're using penny stock transactions to kind of throw everybody off the trail. So they use this to integrate these illicit funds into these penny stocks in a way that the IRS wouldn't raise any suspicions about this money when it comes back into the United States out of the brokerage account. And they're taking paper losses on these penny stocks just so that they could write those losses off on their taxes ultimately when they get integrated with all the other monies they have. So it's a wild scheme, very hard to explain other than in the 9,000 words in which I explained it in this story.
But David, I want to in the last 2 minutes, because it's incredibly hard to actually delve into this. But your series, The Penny Chronicles, on The Intercept, was the first time I've seen it laid out in a way that is actually pretty easy to follow. If you read it from start to finish, you're like, oh, I get it. They're using, they're playing, the shenanigans are taking place in this corner of the market where even less regulation is pointed. And that is critical to why no one is paying attention to it, because you're playing with these stocks that are basically broken. Everyone has already moved away. So the only people involved are part of this larger, it seems like some sort of fraudulent or con type activity. So David, in the last minute here, take us out and what you think, the next steps would be on this, and remind everyone where they can read.
Yeah, I think the important part here is that this should have raised concerns at the Securities and Exchange Commission. They are the agency that is tasked with protecting investors and protecting the public. And they knew, because Chris D'Iorio gave them all this information 5 years ago, and they've done nothing with it. So the real ask here is where was the SEC when all of this was going on, and when not only investors were being pummeled the way that Chris was, but that the public was being cheated through tax evasion from high net worth individuals and money laundering, which is an illegal activity. All of this activity has been, painstakingly laid out by Chris D'Iorio. There's evidence for all of these claims. There are other enforcement actions that have been taken that involve some of these claims, or involve at least some of the same penny stocks.
David, we're going to have to leave it right there.
There is an opportunity to get this done, and the SEC needs to take action.
David, we're going to leave it right there. We've been speaking with David Dayen on his series, The Penny Stock Chronicles. You can find them at The Intercept. David, thanks so much for joining us.
All right, thanks for having me.